Hello, everybody, and thanks for joining this webinar, which for the first time will take the shape of a roundtable. I'm Olivier Vinciguerra, your host today and the chair of Green RWA. So you know this session is recorded. It will be shared on our YouTube TV, unless Boris, Matt, or Yannick, you have a problem with that. As usual, I will start with a few words about the Green RWA and a quick update before we move on the round table per se for about 30 minutes, and hopefully I will animate a discussion for 15 minutes at the end of that, on the back of this round table. So about Green RWA, about Green RWA, we're now about 84 individual members. We're renewing right now, 9 corporate members, and we're always progressing on the number of LinkedIn followers. So please, feel free to share and invite people to join the movement. We are now a member of the UK Sustainable Investment and Finance Association, a local and active network in the UK. We hope this will help us get some more visibility here and capacity to influence the financial community. Thanks, James, the CEO of UKC, for onboarding us, and we strive to push our common cause in the banks here in UK and in London specifically, of course. We have also a few milestones we're working on: the publication of the sandbox, to allow banks and members to play with the CERM model parameters. So this is an ongoing work under the leadership of Jean-Baptiste and from the association, of course, and Shirin from Finastra. This is a first step towards workshop with the UNEP FI we're trying to so we submitted a file to UNEP FI and with David Carlin. Hopefully this will trigger sessions or workshop with the banks. And also, it's also a first step to a potential collaboration with the IMF around biodiversity. As you might have heard in the last months, biodiversity is a hot topic. It's a complex risk which still needs to be modelized and embedded into climate risk analysis, and the IMF is trying to work around this, and we would like to cooperate with them to embed that risk factor into our CERM approach. We're also trying to secure an additional participation to Change Now in May of this year. Change Now is one of the biggest events in the planet about climate change, and we're trying to build a workshop here based on concrete deliveries from the above stream. So we will know better probably in late March, early April, if we're able to participate to Change Now. Given the logistics, it's going to be a challenge, but we're doing everything we can to do that. For our members, please write down the date. Annual Assembly, I should say. It will be held on March 22nd at 3 p.m. CET. You should receive an invitation shortly. And if you're not a member and want to join our community, you can simply scan the QR code on the bottom of this page. It will bring you to the right place. Sorry. Now, on to the round table. Quick introduction and view on what's going on. Climate finance has undergone significant evolution since the inception of Green RWA in June 2020. However, it has yet to be fully integrated into the bank's risk engines, particularly in the calculation of capital requirements. The relevance of climate risk as a financial risk is still a topic of debate, along with the feasibility of embedding it into capital requirements, given the complex nature of climate risk and the timelines involved, very long timelines, up to 2100, as you should know. Despite these, the regulators worldwide have been actively promoting and supporting green financial instruments, mandating green reporting and transparency, and sometimes considering Basel pillars for climate risk. So as we approach our third year as a Green Finance Association, we feel it's essential to assess the current state of climate finance regulation, given the global and coordinated effort required for the net zero transition. Today, and for our first roundtable, we are joined by 3 guests: Matthew Ayearst, Boris, Moutier, and Yannick, Callet, who are all experts in the climate finance field. Based in Toronto, Matthew represents the North American perspective. He's a compliance and regulatory lead at CGI, a Canadian information technology consulting firm. A former VP at BMO, he has extensive experience in capital markets too. Boris Moutier is the Chief Investment Officer for Japan and Asia at AXA. Based in Tokyo and having lived in Hong Kong before, Boris is very well positioned to present their Asian perspective. And finally, Yannick is the director and lead for FS Sustainability, Financial Services Sustainability, I should say, at Capgemini Invent, a global consulting services company. Yannick is an experienced commercial operation director with a demonstrated history of working in the financial services industry, technology sectors, and management consulting, previously with Finastra and Mises, where we met. So thanks to the three of you for taking the time to share your insight, and we will jump right into the roundtable by starting with Europe. So this is obviously a place where there is a big emphasis on climate finance regulation. Yannick, could you share your thoughts on Europe's recent initiatives and how far you think Europe is willing to go?
Okay, thanks very much, Olivier, for inviting me today. It's good to see some former colleagues as well. So before speaking about the European regulation, maybe just a reminder of what's at stake in this environment. So here, what's at stake, we're talking about the enablement of green investment and the decarbonization or the transition of our economy, but still avoiding unintended effects on both the economy and financial stability. So basically a major challenge. We know we've got hundreds of billions, maybe thousands of billions to, for example, support the energy transition. We've got this challenge of the climate risk with this forward-looking nature of the risks. And at the same time, we know that as the 2022 stress tests have shown, we know that an orderly green transition will lead to lower loss than a disorderly or no transition. However, as the tests also have shown, the banking industry is not completely ready yet and doesn't have, let's say, a robust strategy or governance framework to deal with this new nature of risks. So now coming to the regulation itself in Europe, these frameworks, the European regulation frameworks, is aiming at achieving not only the temperature goals of the Paris Agreement, but also offering a very pragmatic and reliable methodology for evaluating the transition plans and thereby redirecting capital flows towards transition. So I'm just going to mention a few important meeting points for our colleagues in the next few years, which will enable me to mention a few of the European regulations. First one being this SFDR, which is already live, ensuring we've got more transparency for financial market players. So SFDR is already live reporting at entity level. Starting in June, we'll start reporting at product level, amongst which the PIs, the principal adverse impacts, are part of. So that's one meeting point. Now, Olivier, you mentioned green RWA efforts to include biodiversity in your framework. So actually, that leads me to the second regulation I wanted to mention. Let's say the taxonomy framework. As you know, we already have 2 environmental objectives that are live in the taxonomy. In the next couple of years, we'll add 4 more environmental objectives, amongst which, of course, the biodiversity aspects, the water pollution, the circular economy. So all these will lead to major challenges in terms of acquiring the relevant data and being able to manage this data. As a third example, I'll mention the green asset ratio. As you know, that from the next year, we'll have to report on a complete green asset ratio, not only is the eligibility aspect, but also the alignment aspects. So that also is a major challenge in terms of data acquisition. And finally, of course, the Scope 3 emissions with a phased approach in the next couple of years. So all those important meeting points to comply with. But this deals with, let's say, the green economy. We've got a green taxonomy it doesn't completely deal with the risks aspects. And for this, the European Central Bank has been very clear, setting some expectations in the way risk needs to be managed in the future. I've given you the example of SREP, which was modified, adding 13 new control points, including, I just mentioned a few of them, the overall risk management framework, which now needs to integrate a climate risk, climate physical and transition risks, and also into the ICAP. A second aspect important to remember are the stress testing, of course. You know about what's been done in the last year, but it's likely that this will become a mandatory exercise in the near future, not an external, for external reporting, but also for internal, as an internal exercise as well. Credit risk is part of it as well, with the consideration of climate risks and environmental risks overall at all stages of the loan cycle, of the loan granting process. Of course, other sorts of risks. So that's the European Union setting up the framework and communicating on expectations. Now, what did happen? How do we verify if this framework is actually implemented? So stress tests happened last year, and the results are actually quite compelling. They clearly showed that although some progress was made, banks are not ready yet to manage those risks appropriately up to expectations. Many banks actually did not include climate risk in their risk framework. There's lots of challenge in terms of data acquisition, use of proxies, which creates distortion in the results. Ability to modelize the data is also a challenge for banks. So all those problems together. So that's results of climate stress testing, which doesn't mean we're going to stop there now. So what's coming in the near future? What can we expect? Well, it's very likely that we'll introduce some mandatory internal stress testing and potential introduction of capital requirement, but these decisions are not made yet in that area. And that's amongst other type of policies like fiscal and monetary policies that can be taken. However, what's now recognized is that a risk-based framework, well-calibrated risk-based framework, can enable certain assets to become less risky as a result of the transition to net zero. And what's also now widely recognized is that the potential of some new rules on specific types of assets might be a tool used to direct the money flows towards the transition. So what's coming next? Next meeting point. We know that in 2024, the EBA will review the requirements currently included in Pillar 3. So that's a meeting point in order to get a view on what's happening all over Europe, but also with an objective to harmonize it internationally. And it's likely that we're getting towards internal stress testing as a minimum, which means for banks' own economists' ability to modelize the data, ability to build some models will become more and more critical to differentiate. You asked about the UK, what's happening in the UK. From what I know, the UK view is slightly similar to the view Europe is taking in terms of where to go. At the moment, we don't know how to verify the risks. So the stress has been put on the governance framework itself. Until we can solve the challenges of data acquisition, data modeling, it's unlikely that there will be some major changes on Pillar 2 and Pillar 1, but it's a direction that's now considered in both jurisdictions.
Yeah, thank you, Yannick. And I think that, regarding UK, I was lucky enough to attend the Climate Capital Conference back in November from the Bank of England. Don't know if you were there, but the conclusion was pretty in line with what you said, specifically that although climate risk was indeed material, there were not yet the ability to model it properly and hence embed it into a capital requirement. So this is a kind of a procrastinating conclusion of the conference. But I don't know, Adrian, as you're with us today, do you have some thoughts about where UK is sitting today? How do you see the dynamic for this year? I think it would complete nicely the picture we're trying to make out of Europe.
Yeah, no, and then thank you and welcome everybody. Nice to be here. So, I think if we look back to the start of Green Overlay and many people that I've been speaking to for several years on climate change, being very honest, I think the rate of change has been slow. And many people, including ourselves as a sort of entity, were hopeful that many people in the industry would run and be sort of more progressive. I think what we're actually seeing now is that Yannick, as you said, there's a requirement of many industry experts to have data. Now, I was at a global climate conference as well last year. I think it was around about June sort of time. I can't remember actually. It was thankfully in Edinburgh, which is where I live. And there was a lot of people on the asset management world there as well. So we're talking about UK, we're talking about Europe, we're talking about global implications there. And there was a lot of people from the asset management business that were saying we cannot act because we have no data. We don't know the precise mechanism. We don't know the precise metrics. We don't know the precision here. There was a really interesting final conclusion to that particular conference where there was a professor from the University of Edinburgh and there was the chief executive of the Chartered Bankers Association. And there was a really quite active fireside chat. And the professor, she was saying, just get on with it. I can't believe that as an industry, you can't actually act because you don't know the precise details of it. You know there's an issue. And Yannick, as far as you're saying there as well, people are starting to assess the risks and these sort of impact of climate change. There's a risk, there's a need, just act. So there's an element there that I think I and others have got a frustration that the regulators and legislators aren't moving quick enough. We know that prior to COP26, there was various commitments and put into law that the regulators here in the UK needed to tackle climate change. But I think all too often, the action takes decades and years rather than weeks and months. I think for us and for this particular group, how can we continue to influence those regulators? The UK and, I sit here in Scotland. Scotland wants to be a leader in climate change as well. But how can we facilitate and show guidance as far as just take a risk? Let's put something in. Let's try it. Let's test it. And I, as well as many of you, I've been engaged with the regulators for decades. I remember interest rate risk in the banking book. If anyone is in the sort of treasury sort of mindset, that was highly resisted. Liquidity risk was highly resisted by a lot of the investment banks. As soon as the financial crisis came on, liquidity risk came front and foremost, and they flipped the regulations within a matter of months. And unfortunately, I was in the seat of being one of the first ones being told I needed daily reporting, even before the date on which the regulator said it would go live. They asked me to do it the week before. We had a couple of issues, but let's not go there. I think the UK is aligned to the EU. The regulators have to act. I haven't seen much action in terms of actual sort of change in the direction and change in the flow. I've seen a lot of action on reporting and a lot of action on analysis and a lot of hope then that if people report it, investors and customers will choose or walk with their feet. But in reality, we're along with sort of this group here, Green Overlay, as well as various other ones, we've almost became a bit more saddened, I think, and the reality has hit home that legislation and regulation is required because the market is not willing to move independent of that. So I don't know whether that's a bit of doomsday, but the UK is with everybody else, but it's not moving fast enough. It says it wants to lead, but it's not. And I'd like to see individual entities really making a big change, and I'd like some bold moves from the regulators to say, look, we'll do a broad brush. It can't be very detailed at the minute, and we appreciate that it's not going to be perfect, but let's start to move. Hopefully, Olivier, that's a bit of an insight.
Thank you, Adrian. And, I'm very intrigued by what you say on the liquidity regulation, and specifically by the fact that US at that time, the US banks were indeed much quicker to change their balance sheet and to protect their liquidity than the European banks at that time. So let's see what happens. We'll talk later about US. But and thank you, Yannick, also for your great points on Europe. So now let's shift a little bit our focus to Asia and specifically China, which is responsible for 35% of the global greenhouse gas emission. So, and given it's the size of its population, about 20% of the worldwide population, China needs to participate, if not lead, the net zero effort, including in terms of climate finance. China was an early adopter of green bond taxonomy and has been a significant issuer of these bonds. However, it remains challenging to have a clear view of the current state of affairs in China. Boris, could you provide us with some insight there?
Yes, thanks, Olivier. So first, you're totally correct that if anything, post-COVID, China is even more the manufacturer of the world. So if you take some industrial sector like steel, I think we are talking something like 50%. So clearly, much of the global result that we expect should come from China. So that's critical. The good thing is at the top, so at the level of President Xi Jinping, a clear goal has been edicted. So it's basically to have a peak carbon by 2030 and to achieve neutrality not by 2050 but by 2060. And you're also correct that on some aspects like green bonds, this market developed relatively quickly, as early as I think 2015, 16. At that time, with maybe some norms which were rather different from the rest of the global markets, especially Europe. So you're also right that what makes it a bit difficult to fathom is you have on one hand, regulation is key because obviously it's a free market with socialist and Chinese characteristics, as they say. So it's on one hand very much top down. So and lots of the various actions of the government bodies are derived from the goals from President Xi Jinping. But then you have some overlaps depending on the sectors. You have a variety of government agencies that act on that. And you have also the local government. So if we talk maybe more specifically about green, the green taxonomy, a new version was edicted, which actually gets has greater convergence towards global norms. And on capital, so I think so. The key body is obviously PBOC, the central bank, People's Bank of China, and basically I don't think it's as advanced as was described in other countries, but basically they have asked, and we got results earlier last year, stresses from banks. All the tests were passed. Which doesn't necessarily say much, but probably more relevant is the fact that there is no official path to charging capital with respect to climate risk. But what we know already is that PBOC, as part of the rating they assign to banks, take into account ESG. And I think that's quite important. As you know, I'm on insurance side, but I know for a fact that when you're running a business in China, the various rating you receive from your regulators is key. Is really a key driver even for investment decision or loan decision for banks. So I think that will be progressively more impactful. And maybe last point is in terms of positive incentive, along with other central banks, PBOC set up a green loan program, which is a conduct for them to lend to banks at attractive rates. We are talking almost 2% cheaper than I would say the normal rates to lend them as long as the proceeds are used for green purposes. So here clearly going in the right direction, but the amounts are still relatively modest.
Okay, thank you. And I think it will be interesting to discuss later on the effective. You talked about how strong the economy in China is coming together after COVID. I think it will be interesting also if we have time to discuss how strong they are in the net transit how strong they are in the transition economy. There is a very interesting study of the International Energy Agency here to quote. So just one more question, maybe as we stay in Asia, as you can say in Asia for one more minute, Boris, about Japan, because we know Japan is a minor emitter in terms of greenhouse gases, but still a strong, very strong economy in the world, but they seem very quiet on the climate finance front. Could you shed some light on their trajectory in that regard?
Yes. So I think here again, obviously, the central banks, Bank of Japan, will be the key government body. We should really monitor the development because, as you may have seen the news, there will be a new governor who actually will talk to the Congress this very Friday, and that's really. I mean, of course, the first expectation is to hear about him, about, I would say, general monetary policy, but there is also some expectation from global markets about what he will say on ESG and climate change. So what we know for now is you are correct that it's really a step-by-step approach. Now, I think I would say at least the theoretical recognition is there. If you take a recent speech from Deputy Governor Amami Hassan, he recognized the importance of green finance to achieve the goals, which are the one of obviously the government of Japan, who's fully aligned with the international community on that one. He also interestingly recognized that it's, as opposed to JPOL, for example, we will hear later, but he also recognized that it could be consistent with the price stability mandate to act on that because climate change is creating disruption on the economy, therefore potential flare-up volatility. But there is no specific plan about capital charges, and stress tests were conducted, but the stated goal is relatively modest, or I would say technical in nature. It's not to assess if banks have enough capital in front of those emerging risks, but it's rather to understand the data point, the methodology. So it's really a step-by-step approach. Now, and similarly to PBOC in China, Bank of Japan started 1 year or two ago a program for green loans, similar scheme whereby they would lend to banks in exchange for a relatively general commitment to disclosure and directing appropriately the proceeds. Here again, relatively modest size, and we are talking $30 billion. And last but not least, Olivier, again, with Hassan, will be very interesting to hear him on Friday because people obviously picked his speeches. He didn't talk very recently about ESG, but he did so a couple of years ago, and he seemed to be potentially skeptical about using the means of the central banks for fighting climate change. So let's see what he tells now that he's in charge, because he's a university professor, so his type of speech will evolve.
Okay, thank you, Boris, for this clarification. So let's move now to North America with Matthew. Matthew, the debate around climate finance in the US appears to be highly politicized, with President Biden appointing Mrs. Lennart as his top economic advisor. You probably know, for the sake of the audience, but you know it, Matthew, that she was considered to be the head of the Fed at some point. And this happens while Governor DeSantis in Florida tries to ban ESG instruments in his state. So how do you see climate finance evolving under these opposing pressures, Matthew?
Yeah, thanks, Olivier. So before I get into the politics, I want to sort of talk about regulation a bit. So the U.S. Fed has recently indicated it will continue climate-related stress testing for significant financial institutions in the U.S. And there's an indication that it'll be cascaded downwards. So most of the banks know that this is coming. The SEC is set to reveal its sort of TCFD related rules on climate disclosure in April. Originally, it was supposed to be 2022, and this is following a much longer than expected consultation period. They actually received over 14,000 letters from corporations and stakeholders, a lot of backlash over Scope 3 GHG emissions reporting. I think it's really important to mention IRA. So the Inflation Reduction Act of 2022, which has been signed into law, is actually the most significant climate legislation in US history. It offers funding for programs and incentives to accelerate a transition to a clean energy economy. It's going to support commercialization of leading edge technologies such as carbon capture, storage, and clean hydrogen. It also allocates money to directly environmental justice related priorities. It requires recipients of many funding streams to actually demonstrate equity impacts. It directs nearly $400 billion in federal funding to green or clean energy, with the goal of substantially lowering the nation's carbon emissions by the end of the decade. Corporations are really a huge recipient in this particular act, 216 billion worth of credits for them. There's also credits for the smaller SMEs and homeowners for remediation and renovations, which is really great news. I think in Canada, the UNPRI just called us out this week for our low regulation environment regarding rules and policies around responsible investing, and in association with the global standards that are being sort of developed on the horizon right now. And I'll give you a little further insight into that. Sort of Canada's securities administrators were pretty fast out of the gate in October of 2021 with regards to saying that companies will be publicly reporting and disclosing on sort of TCFD-like guidelines. But it's very much now kind of a wait and see period. Basically, Canada's kind of waiting for the US to see what happens. And this is kind of common. Canada often takes this very hurry up and then wait and see approach. And climate is following this pattern as well. They're sort of seeing this, acknowledging the release and work done by the ISSB and the US Securities and Exchange Commission. So they're reviewing vast comments, as I said, the 14,000 letters, right? The Canadian rules were actually quite lax, in my opinion, and obviously the UNPRI agrees. So essentially, one example would be like they said, so we want you to do scope 1, 2, 3 GHG reporting and scenario analysis, but if you're not able to, just explain why not, is basically the rule, which is really disappointing. We know that the ISSB just concluded a conference in Montreal last week, and it's really, I think the big positive is the momentum coming from that. I think the momentum is huge. I really think it's a foregone conclusion that sustainability disclosure requirements are coming, sort of, but the interoperability between like the various standards will sort of be key for the Canadian Sustainability Standards Board. So we in reaction to the ISSB, Canada set up its own CSSB, and I think this is indicative of sort of the jurisdictionality or the jurisdictional nuance that will actually exist globally, and as in a second I'll get into it, politically in the US. So, you know, everywhere, well, the ISSB is going to introduce standards. It's up to each jurisdiction to adopt those standards by the regulator, right? So there will be some jurisdictional nuance in various jurisdictions, and Canada will have certain views on how or receptive Canadian companies will be to this, or what it will have to be sort of tweaked in order to make it more receptive. So I'm going to go into the politics now. So there was an article, a really great article in the New Republic last week, and there was a good article today in Blue and Green about ESG and politics in the US. And it was actually arguing in favor or in defense of ESG reporting. So it's been quite politicized in the US. Yes, you mentioned Governor DeSantis. So he invoked measures to sort of prevent Florida pension plans from utilizing ESG principles and investing in ESG. And he's basically stated like ESG is DOA, so dead on arrival in the state of Florida. So it's been effectively outlawed. He kind of has a leg to stand on if you strictly interpret traditional notice of fiduciary duty. And this is one of the reasons why Vanguard actually left GFANZ under the notions of fiduciary duty. The New York City Comptroller, Lander, and the city pension funds called on major US and Canadian banks to set absolute GHG emissions targets for high emitting sector. So that just happened in January this year. It's interesting that 20 out of 35 anti-ESG related bills introduced to Congress failed to pass or become a law. So that's still a 30% success rate. So it's kind of scary. And then California last year passed a bill requiring corporations with more than $1 billion in annual revenue and doing business in California to disclose all scopes of GHG emissions. In Canada, politics have been much less overt. It's much more behind the scenes, but definitely there's been a somewhat pushback from like oil and gas invested provinces. And it's just sort of the typical sort of protectionism that we always see. I think the SEC proposal is a very good one, but it does differ from the TCFD. And I think we're all really anticipating the introduction of the ISSB rules in June. So everyone sort of has that on their radar. So that'll be sort of the overall view for the US and Canada right now.
Thank you, Matthew. And I want to pick on the conversation you started on interoperability, because as you know, it's obviously a major struggle for banks, and it's a topic of discussion in a lot of conferences I attended in the last months. Specifically, you could see that even at the FRAG level, to understand how banks are going to cope with all these regulations, sometimes in the same region, sometimes for international banks across the world. And I wanted to pick also your view here. All speakers welcome to chip in about your view on how coordinated the efforts are, or is it going to be down to the banks to figure out all these regulations at the same time?
Okay, so I just wanted to add additionally that the divide in the US is very red state, blue state. So you have like California on the one side, New York on the other side, very pro ESG, and then you have Florida down south, very negative, Texas not so hot, although they have a lot of clean energy in Texas. So it's an interesting situation in the US. With regards to interoperability, yeah, I mean, right now you've got banks sort of, reporting on GRI, SASB, TCFD, and then sort of looking at, scenario analysis in their risk reporting, and they're being stress tested by their, central bank or their local regulator. So it's a lot of work. It's a lot of work, and also it's really questionable how much penetration these frameworks are actually getting from an operationality or operationalization point of view, whether they're just reporting for the sake of reporting, or whether really they're taking to heart and kind of operationalizing some of this reporting in order to create new processes, and to make the banks actually more sustainable themselves, and to really look at credit risk. We talked to a bank in the US just recently, and they're like, yeah, we don't like the term ESG. And we're like, that was the first thing they said is, we noticed on your first slide, it said ESG. We don't like that term. Now, they were very interested in climate risk, but they didn't like the term ESG. So it's very interesting. So yeah, the question is, how will all these different frameworks work? I mean, ultimately, we're hoping that ISSB will be taken up, right, with obviously some jurisdictional nuance, and then TCFD reporting with the addition of the very important work that's going on with the TNFD right now being incorporated. So I think sort of that's what people are looking for and wanting. But generally, yeah, the standard right now is reporting to 2 or 3 different frameworks. It's a lot of work, and it doesn't really make sense. It's more work for the sake of work. I think a lot of corporations are seeing it.
Okay, thank you. Boris and or Yannick, did you have a specific view on that to share with the group today?
Yeah, absolutely. So, well, first, what we know is that the BAL committee is working on BAL 4 and BAL 5, integrating climate risk. So we don't know yet which form, in which form that will happen, but because there is incredibly stakes on the efficiency of the rules and profitability of banking activities across the different regions. But that's going to be a reality at some point. Short term, we know about the climate stress tests. Also, the European Commission set some indicators. We know that there were a number of add-ons on Pillar 2 for some banks in Europe. We don't know the names. I'm still trying to get them, but apparently it's there. The message is clear. Now, also internationally, Europe is setting up some, like for example, the carbon border adjustments frameworks, which means we're getting ready to deal with differences across regions, and Europe will still move in this direction, whatever all the regions are doing. In my view, that creates actually opportunities for banks who are at early stages in that journey to capture some interesting business opportunities considering the transition scenario, as we know that for assets that needs to enter the path of transition scenarios, we also have business opportunities to make within the financial industries. So yes, there might not be complete interoperability, but it's still going to be a reality that banks need to back on.
Okay, and I think in China, in Asia, I recall that China had made some joint work with the ECB, Boris, about the common ground taxonomy. Is that still rolling on?
Yes, so the green, so there was substantial convergence. In particular, one of the big weakness, you could say, of their previous taxonomy was that even when a relatively low percentage, I think it was 60% or so of the proceeds only were going to green projects, bonds could be deemed green. That's not the case anymore. So that's a significant area of alignment. You still have areas where you have even areas where they are more stringent, interestingly, like on gas. But then I think overall the expert assessment is the convergence is only something like 80%. And they are still, that's due to the nature of their economy, still supporting in a way oil and gas in a way that would not be done in other jurisdiction. So I think the Chinese authorities are really engaging in the global forum, but then the convergence is clearly not 100%, for sure.
Okay. Thank you. I want to take the last minutes of our webinar. I know we're trying to keep it to 50 minutes usually, to open the floor for questions to our speakers today. So I mean, I don't know, Wally, do you see any questions on the chat, or feel free to open your mic and question us. Yeah, we have Philippe has a question here.
Yeah, thank you. I don't know if it's a question. It will be maybe a remark. No, because it's really something which is puzzling me. I don't know if we are not making a confusion between, if you want, taxonomy and regulation, in the sense of regulation pushing things to be done. The taxonomy has been born or was created to ensure that from an investment perspective, you had a kind of transparency and clarity on what need to be disclosed. So at the end of the day, there is no incentive except maybe having better loans condition or better investments, which could be pushing corporates and issuer to match all the requirements. So it's an indicator. The other point is that the central bank are pushing to do things, but unfortunately, I would say I'm always taking maybe one minor part of the market, which is the collateral market, which is a very interesting one, okay? Because that's as a core business of the central banks. And there have been no regulation whatsoever from an ESG or sustainability perspective, except if I miss something, which have been issued. So the only way to push something is having a prudential action from the central bank to say, I don't want anymore this type of collateral you're giving to me. The ECB has said, I will, clean wash my balance sheet. How much has been done so far? And the problem that the collateral is coming to cover something, risk. How many strong paper, I would say, able to cover the risk are available today? So I think we are on a journey. And to echo what the presenter, the Matthew in the US mentioned, I think your frustration is the same. I'm sharing it. It's just because the regulation which has been implemented doesn't force anybody to do something. That's the point. And we need to have a more, I would say, obligatory, action to be taken. They are, except the market. So especially in the US and in Canada, where the market is very important. So we leave the market doing what he has to do and saying, investor, up to you to start to decide where you want to invest. And that's how you will punish the bad player. And I would stop, Olivier. I'm sorry. It was just...
Thank you for your remarks. And I see both Boris and Matthew are raising hand to react. So Boris, I think you raised first.
Yeah, maybe. Thanks. So maybe Philippe, good question. I can answer your first point. I think this is exactly what actually the Chinese government, I think, is trying to achieve, which is that the green taxonomy is then constituting a framework, which in itself is just, I agree with you, to nomenclature, to describe lending and investment activities, but then they make it they create positive incentive out of it, like the green loan program I mentioned. So for me, it's really both, to answer shortly. So it's still impactful.
I think Philippe, you raised a really good point. It's something I've been thinking about it a lot with regards to collateral. So I think a lot of people are buying and holding, and maybe they're selling, green bonds, sustainability bonds. But I don't know anyone who's probably taken one, in a security sec lending transaction as collateral versus equity or versus whatever, right? Or done a repo or something like that. So I'm not sure. It's an interesting question. And I think definitely that is one area that has not been looked at yet and needs to be looked at. And I think definitely the clearinghouses need to be sort of co-opted into encouraging this, because you're right. If this has to be a full economy solution, it can't be just this one. Great, we're issuing green bonds and you're buying green bonds and that's it. There's a massive amount of transaction that goes on that's not being looked at. I think the collateral question is a really interesting one. So I think you brought up a really good point.
Thank you. So Philippe, before you take the mic again, I just want to make sure Lara, who's a question in the chat, gets an answer. So her question is, in the UK, there are discussions around a credits approach for nutrient capture, biodiversity and other beyond carbon. Are you seeing any of these coming beyond emission reporting? So Lara, your question is for who specifically? Is it for a specific region here?
I was just wondering in general if this is something you see elsewhere. So far, there's been a reluctance to report on anything beyond carbon just because of the lack of a common language. But I start to hear a discussion in Natural England around nutrients as credits. I start to see biodiversity being more considered. So I wonder if anywhere in the world you see this being taken into account into reporting as well.
Matthew?
Go, Yannick. I say no in North America at this point, honestly.
Not in Asia.
Yeah.
And for Europe, and the environmental objectives in 2 years will make it mandatory to report along that line, including, pollution, biodiversity, circular economy. So going beyond purely climate aspects.
Okay. Thank you. And I believe it's interesting from that perspective that to see, when you talk with banks in the UK and France or Europe, it's not the same vocabulary exactly, because I was reflecting on that with an HSBC exec who says that basically in UK, you have to talk about climate. And when you're in Europe, you talk about climate and environment. It says a lot about potentially how the UK taxonomy could diverge from the EU taxonomy on biodiversity and do no significant harm specifically. But we'll wait and see at the end of this year for the UK taxonomy. Sorry, Philippe, is that you wanted to make another point, Philippe, here? No, you had okay.
I
Cool.
think I just want to re-raise the point of, like, we have a lot of frameworks and stuff, and this goes back to interoperability. Like, so we have Basel now looking at Basel 5, and there'll be climate. There'll be a climate. Really, I think there's 12 principles within Basel 5 with regards to climate risk. You have all these different pieces. Like, how will they work for everybody? How are banks going to respond to everything? How is this not going to give them really a lot of reporting fatigue, right? It's a really big issue. And then if they get reporting fatigue, how are they ever going to operationalize this, right?
Absolutely. Okay, so do you have a last question here or remark before we close this session? No? Okay, so I think we covered it all. Thank you, Yannick, Boris, and Matt for your time and your insights. And great session today. I think we got a peak of participants, but Walid will be sure to share with you the statistics and the recording. So thanks again, and see you next month, specifically for the members of the annual assembly.
Thank you.
Thank you very much. Have a good day.
Cheers.